Hello everyone, welcome to Grade B online learning platform. So guys, we have almost completed all the accounting standards that were mentioned in our course, and this is going to be the last accounting standard, that is Accounting Standard 13 on investments. So let us start with it. Yes, so Accounting Standard 13 on investments. So before starting any accounting standard, we have always seen that the first thing that we start with is objective, and we always end with disclosures, the disclosure requirement as per that accounting standard. So here let us start with the objective. Accounting Standard 13. Accounting for investments is widely used and deals with accounting for investments in financial statements prepared by a company and prescribes various disclosure requirements. As per Accounting Standard 13, the investments are assets held by an enterprise for earning income by way of dividends, interests, and rentals, for capital appreciation, or for other benefits to the investing enterprise. Investment in shares, debentures, bonds, etc., held for the purpose as referred to above are considered as investments. Okay, so they have stated that the main objective of this standard is going to be provide us with the way to deal with the accounting for investments, and also at last there are going to be various disclosure requirements that is well stated over here. So the second paragraph, it tells us that what is investment as per the accounting standard 13. So they are assets. Now we all know that assets are represented on the credit side, that is on the right hand side of the balance sheet. And why they are known as assets? Because we know that assets are something that will provide future benefits to the business. So that way also investment, they also provide future benefits to the business or to the enterprise who holds them by way of capital appreciation. That means increase in the capital or money, and that is by way of earning income by way of dividends, interest, and rentals. It means nothing but investment when done will produce three things which will depend on the kind of investment that we make. Either it will provide you with the income as per dividend or interest or rentals. Now the examples are stated in the last paragraph. That means that investment can either be in the way of shares or debentures, bonds, and etc. So when you invest in shares, you will get dividends. When you invest in debentures and bonds, so they are always interest bearing securities. We have also seen the definition of debentures in a previous lecture. So the bonds and securities will always give you interest income on that. And when you invest in any kind of property as per investment for way of letting it out to any other person or to any tenant, then you always get rents for it. So these are the three ways. Now let us move further. Now the applicability of Accounting Standard 13. Okay, now this accounting standard is mandatory in nature for all the entities. This accounting standard is applicable to all companies and non-companies irrespective of their level. Now we have also seen in the previous lecture the types of entities. Now let us quickly revise that for the purposes of this standard. Now entities are of two types. They are corporate and non-corporate. Corporate, it means with the companies, and companies are further of two types: the small and medium-sized companies and the non-SMCs. And the non-corporate also has three levels of entities. Now this accounting standard is covered on every type of entity, so fully on this, right? No need to bifurcate any further. It is applicable on everyone, because for SMCs and level 2 and level 3 enterprises, we have seen that there are partial exemptions given to them. But as per this accounting standard, no exemption shall be given for its accounting. If you are making any investment, you need to follow this accounting standard treatment. Next, we have the examples of investments. Okay, now here in this line, we saw the examples are shares, debentures, bonds, and etc. So let us see. Now here we have government bonds. Whenever government issue bonds, it is also interest bearing security. That means if you invest money in these type of security, you will get interest for it monthly or annually, quarterly, that type. and here it is property, and here we have debt funds, that means the debentures, and here we have equity funds, that means the shares. Okay, now here I have written a note not to be used for business activity. See, when you are buying or purchasing any building for the purposes of your own business, that means say you're buying a building for warehouse purposes or storage purposes of your stock, that means you are using that building in your own business. That type of investment is not called as investment as per this accounting standard. Okay, if you are buying any building, if you are like purchasing any building for rental purposes, that means you want to let it out to someone else, that time it will be called as an investment. Okay, so whatever building you are purchasing, you do not have to use it for your business activity. You always have to let it out to any other person. Only then we call it as investment. Okay. Otherwise, if you are buying any building for the purposes of business purposes, then it is a fixed asset and the treatment is provided in accounting standard 10, that was property, plant and equipment. Now we have assets held as stock in trade are not investments. Now the question arises, the inventory or the stock in trade that you have kept in the business, you are also investing money on it. Okay, for preparing it, for procuring it, the raw materials, the WIP and the finished stock. So is it investment? No, because that is a part of your business and that is inventory, for which we deal in accounting standard 2. But here investments are something that are assets held by enterprise for earning income by these 3 ways only. Okay, not by the way of receipts that you get when you sell and purchase the inventory. Okay, now we have the scope of accounting standard. Usually in scope we see the statement will not deal with these kind of things. Everything else will be covered except for these kind of things. So the first one being the basis for recognition of interest, dividends and rentals earned on investments, which are covered by accounting standard 9 on revenue recognition. Now here they say that this accounting standard 13 will deal with the treatment of recognizing the investments, but the income that the investments will generate will not be dealt with in this accounting standard. Okay, 3 types of incomes are generated, that is interest, dividends and rentals. This is already specified in accounting standard 9, that was the revenue recognition. Okay, the revenue that is produced by these investments will not be dealt with in accounting standard 13. They are covered in accounting standard 9. Now, operating or finance lease. So there are certain types of leases that are operating or finance leases. These are also not covered. By way of lease, we get rentals. Okay, so these type of leases are not covered within the scope. Then we have the investment of retirement benefit plans and LIC, the life insurance enterprises. So now if you are investing in any life insurance plans for your enterprises or goods or any retirement benefit plans, that type of investment is again not covered in the scope of accounting standard 13. Then we have the mutual funds, the venture capital funds and or the related asset management companies, banks and public financial institutions formed under a center or state government act or so declared under the Companies Act 1956. Now, one thing here, पहले हम ये सोचते हैं कि म्यूचुअल फंड्स एंड वेंचर कैपिटल फंड्स का बिजनेस क्या होता है. The main business of mutual funds is to procure securities and buy and sell securities, that are shares and the debentures. So for normal people like us, like we are not mutual funds, so for us to procure the shares and debentures would be called an investment. But for mutual funds and venture capital funds, it is their business, it is their normal business activity. Just like I told you here, if we procure a building for a business activity, it is not called our investment then. The inventories that are used in the business are not called investments. Similarly, for mutual funds and venture capital funds, the shares and debentures, it is a part of their business and not their investment. Therefore, we do not cover it in the accounting standard 13 investments, because investment is anything else we do apart from the business. Okay, that is the reason why this D point is not covered within the scope of investments. Then we have some important definitions to start with. A current investment is an investment that is, by its nature, readily realizable and is intended to be held for not more than 1 year from a date on which such investment is made. So we all know from the very beginning of the accounting that assets are categorized into two types. Same, liabilities are also categorized into two types, current and non-current. So whenever we use the word current in behind every word, it means that it should be realizable or held with us for not more than for not more than 1 year. So similarly, what is written over here is a current investment will be an investment that is by its nature readily realizable. That means we can realize it whenever we want, and it is not intended to be held for more than 1 year. So within 12 months from the date of holding it, it should be realized. Okay. A long-term investment is an investment other than a current investment. So whatever is a current investment, apart from that, everything else is a long-term investment. Then we have an investment property. There is a very small concept for investment property that we will see later on. But right now, you must know that this word exists. So an investment property is an investment in land or buildings that are not intended to be occupied substantially for use by or in the operations of the investing enterprise. The example we saw here of a building was the investment property that is not occupied or substantially used for the operations of the investing enterprise. Okay, and they are the land and buildings. Now, fair value, we have covered this definition more than once. Let us quickly recall it. So, it is the amount for which an asset could be exchanged between a knowledgeable willing buyer and a knowledgeable willing seller in an arm's length transaction. So, we know the meaning of it. Let us move to the next slide. Classification of investments. So, just like the liabilities and the assets, the investments are also categorized into two parts. They are current and long term. Okay, not non-current but long term. So investments are current and long term. The current investments are known as current assets only. So whenever we prepare the financial statements, we will always put the current investments in the heading of under the heading of this current assets, and we will always put the long-term investments under the heading of non-current assets. So enterprises present financial statements that classify fixed assets, investments, and current assets into separate categories. Investments are classified as long-term investments and current investments, and we have seen the bifurcation here. Now, cost of investments, broker, duties, and fees. Now, whenever we acquire any investments, so there are many kind of transactions that happen and we incur cost on it. So what are those costs on acquiring the investments? The first one is the broker duties and fees. The cost of investments include a charge related to acquisition of brokerage duties and fees. So for those who invest in mutual funds or the equity shares through share khan or any other broker, would know that whenever you procure, buy or sell any security on those brokers, on those मतलब sites, the share khan, at that time आपको एक brokerage pay करनी पड़ती है and certain types of duties, say annually for the maintenance of your account and the fees to mutual funds. So for the acquisition of investment, you need to pay brokerage duties and fees. Then we have the non-cash consideration. So in case investments are acquired or partly acquired by issuing the shares or issuing other securities, the acquisition cost is the fair value of the securities issued. Now, जो first part था उसमें we paid a cash consideration, but in the second part it is a non-cash consideration. Why? Because we are acquiring the investments by issuing other security or by issuing the security. and at that time what happens, the acquisition cost will be the fair value of securities issued. So we are kind of exchanging the security for other security. Okay, so what will be the acquisition cost in this case? It will be the fair value of the security issued. Okay, so whatever security has been issued to us, that will be the fair value or the acquisition cost of this security. And here we know clearly, since we have paid cash for it, we know that this has been the cost of that procuring the investment. Now, if an investment is acquired in exchange or part exchange for another asset, now here it was partly or wholly acquired by issuing the shares or any other security, but here it is written any other asset, say fixed asset, but here security. Okay. Now the acquisition cost of investment is determined by reference to fair value of the asset given up. तो आपने जब एक एसेट के जगह आपने कोई सिक्योरिटी इन्वेस्टमेंट एक्वायर करी है, तो उस टाइम पे आप कैसे डिटरमिन करेंगे कि आपकी कॉस्ट क्या रही है उस इन्वेस्टमेंट की? दैट इज विद द रेफरेंस ऑफ द फेयर वैल्यू ऑफ एसेट गिवन अप. तो आपका जो फिक्स्ड एसेट था जो आपने दिया है उस इन्वेस्टमेंट को एक्वायर करने के लिए, उसकी फेयर वैल्यू आपकी होगी जो that will be known as the cost of investment. Now, it may be appropriate to consider the fair value of investment acquired if it is more clearly evident. Sorry. So, अगर आपको उस जो आपने एसेट गिवन अप किया है, दैट मीन्स द फिक्स्ड एसेट जो आपने दिया है, उसकी कॉस्ट, उसकी फेयर वैल्यू निकालनी अगर इट्स क्वाइट इम्पॉसिबल और इट्स नॉट क्लियरली एविडेंट, देन यू कैन ऑल्सो कंसिडर द फेयर वैल्यू ऑफ इन्वेस्टमेंट एक्वायर्ड. ओके. Next we have right shares. In case right shares offered are subsequently subscribed for, cost of such right shares is then added to carrying amount of the original holding. So first we need to understand कि right shares होते क्या हैं. So right shares are nothing but, अगर आपके पास एक किसी भी कंपनी के शेयर्स हैं पहले से, लेट्स से इन्फोसिस के आपके पास ऑलरेडी शेयर्स हैं, तो आपको एक एग्जिस्टिंग शेयर होल्डर बोला जाता है. And in that case, right shares means the right given to the existing shareholders over the new potential shareholders कि आपको हम एक पहले से ऑफर दे रहे हैं that before making the public offer आप इन शेयर्स को खरीद सकते हैं. Right? So in that case, if you are offered and then आप उसके लिए सब्सक्राइब कर लेते हैं, that means आप उनको ले लेते हैं, तो आपकी कॉस्ट ऑफ सच राइट शेयर्स क्या होगी? जो भी आपकी कॉस्ट होगी उन राइट शेयर्स की, वो आपको ऐड हो आप उसको ऐड करेंगे अपने ऑलरेडी जो आपकी होल्डिंग थी बाकी इन्वेस्टमेंट की, आप उसको उसमें ऐड कर लेंगे. एंड दैट इज़ वेरी ऑब्वियस कि आप कोई भी न्यू इन्वेस्टमेंट करेंगे देन यू विल ऐड इट टू द प्रीवियस इन्वेस्टमेंट. ऑल्सो राइट शेयर्स में आपको एक कंसेशनल रेट पे मिलता है. सी इफ पब्लिक ऑफर से पहले आपको वो राइट दे रहे हैं इन्वेस्ट करने का, उसकी कोई ज़रूरत ही नहीं होगी बिकॉज बाद में भी आप इन्वेस्ट कर ही सकते हैं एट द टाइम ऑफ पब्लिक ऑफर. बट द मेन पॉइंट ऑफ द राइट शेयर्स इज कि वो आपको एक कंसेशनल रेट पे मिलता है. फॉर एग्जांपल से मार्केट में 200 रेट चल रहा है फॉर द इन्फोसिस शेयर्स, आपको वो 150 के रेट पे कंपनी प्रोवाइड करेगी, राइट देती है कि आप इतने पे सब्सक्राइब कर सकते हैं. So that is the concept of right shares, and when you subscribe for that right, at that time you add them to the holding investment. Then we have the interest, dividend or other receivables. So the dividends, interest and the other receivables are in the connection with the investments are usually considered as income, that is the return on the investment. Now however, in certain conditions, such inflows signify a recovery of the cost and doesn't form part of the income. So interest, dividend and other receivables हमें पता है कि these are the return on the investment that we have made. Now ये हमारी income मानी जाती है, so they have nothing to be, they don't have anything to be done with the cost of investment. But in certain cases क्या होता है कि ये हमारी जो कॉस्ट होती है इन्वेस्टमेंट की उसकी रिकवरी का पार्ट बन जाते हैं. दैट मीन्स ये हमारी कॉस्ट को रिड्यूस कर देते हैं. वी विल सी दोज कंडीशंस, बट यूजुअली these are the return on investment and they are dealt with according to the accounting standard 9, that was revenue recognition, and they are always taken to the profit and loss account. But certain cases में हमारी cost of investment को reduce करेंगे. So let us see that case now. In which condition dividends are treated as recovery of costs. Example, I have purchased equity shares of Infosys from Mohan on 1st 7th, that is July 2018 at rupees 250 per share. Number of shares that I purchased was 500. So Infosys ke shares, if I'm taking from Mohan on 1st July 2018, that will be accounting that will be the financial year 18-19, that is 2018-19, because 1st July 2018 कौन से year का part होगा, that will be 2018-19. Okay, so my net investment on this date in equity shares will be the 500 shares that I purchased multiplied by 250 per share that I gave. So my net investment or my cost of investment will be rupees 1,25,000. Now on 18th August 2018, I received rupees 15,000 dividend from Infosys for the financial year 2017-2018. So मुझे कौन से year के लिए dividend मिल रहा है, that is very very important for me. Okay. मुझे मिला किस year में है, that is irrelevant, but मुझे कौन से year के लिए मिल रहा है, that is important. So Infosys ने 15,000 dividend दिया है, that is for financial year 17-18. Now I purchased the shares in accounting year that is 18-19, but I got dividend for the year 17-18. So here you can see financial years is 17 to 18. Owner of the shares was Mohan till 17 to 18, and here this period represents 18 to 19, 2018 to 2019, this period. And in this year I was the owner of these shares, and this date represents here when I purchased those shares. So the important concept here is कि whenever I receive dividend for the period in which I wasn't the owner, that is referred to as the pre-acquisition dividend. Okay, and whenever I will get any dividend for the period for which I was the owner of the shares, that is known as post-acquisition dividend. And the treatment for pre-acquisition dividend and post-acquisition dividend is different. ठीक है, अब अगर आप ये देखें कि इस डेट पे दैट इज 1st जुलाई 2018 पे डिविडेंड मिला मेरे को, बट ओनर कौन था जिस टाइम पे डिविडेंड डिक्लेयर होना, मतलब जिस ईयर के लिए डिविडेंड डिक्लेयर हुआ है उस टाइम के लिए ओनर कौन था, दैट वाज मोहन. एंड सिंस ये मेरा प्री एक्विजिशन डिविडेंड है, इट विल ऑलवेज रिड्यूस द कॉस्ट ऑफ माई इन्वेस्टमेंट. ठीक है, जिस पीरियड में मैंने मेहनत करी ही नहीं, अगर उस पीरियड के लिए मुझे इनकम मिल रही है और आई पेड द अमाउंट टू समवन एल्स, दैट मीन्स मोहन को मैंने इतना पे किया था उस इन्वेस्टमेंट के लिए, एंड आई एम रिसीविंग डिविडेंड फॉर विच मोहन वॉज अकाउंटेबल. सो दिस विल रिड्यूस माई कॉस्ट ऑफ इन्वेस्टमेंट. दैट मीन्स कि मेरा प्री एक्विजिशन डिविडेंड है, मेरी एक्विजिशन से पहले का मुझे डिविडेंड मिल रहा है, सो it will reduce the cost of my investment. So when मैंने इन्वेस्टमेंट करी होगी टू एक्वायर दिस शेयर्स, तो मैंने अपनी ऑन परचेज ऑफ इन्वेस्टमेंट एंट्री इन बुक्स ऑफ अकाउंट्स मैंने क्या करी होगी. ऑन 1st जुलाई 2018 इन्वेस्टमेंट, whenever the asset is increased, what we do, we debit it. So investment is an asset for the business, and whenever there is an increase in asset, we debit it. So investment account debited with 1,25,000, we have already taken it out over here. And to bank is another asset, and since we have paid through our bank for the acquisition of this investment, our asset decreases, and in that case we credit it. So investment to bank we have 1,25,000. Or on acquiring the dividend, what will be the entry in the books? मतलब अब हम इसको dividend मान के इसको what we will do? Will the treatment be to take it in the profit and loss account, or will it reduce the cost of investment? It will reduce the cost of investment because we have received dividend for financial year 17-18 for which we were not the owner. Okay, owner was Mohan. So whatever we have paid to Mohan, we will reduce from that the amount of dividend that we have received for that period. Okay, so now since on 18/8/2018 we have received the dividend, we will on that day make entry in the books of accounts by bank account debit. Why we are debiting bank here? Because dividend will be received in the bank. So bank will increase with 15,000, right? And investment. Since earlier we debited investments with 1,25,000. Now to decrease the cost of investment, what we will do? To subtract from it, we will credit it. So the net effect will be investment to bank with this 1,25,000 minus 15,000. That will be our net investment. Okay. Now again I received rupees 12,000 as dividend for financial year 18-19. Again, what is relevant for me? For which year I received the dividend? Okay. Now in 17-18, I wasn't the owner, but in financial year 18-19, I am the owner of this investment, and I am now receiving the dividend for financial year 18-19, right? This is dividend pay. We have our right, but for how much period? That is important. See, in financial year 18-19 also, on 1st July 2018 we made the investment. That means before that, the financial year 18-19, it starts from 1st April 2018, right? And we are purchasing or investing in these in the acquisition of this investment on 1st July. So for 3 months also in this financial year 18-19, we were not holding this investment. So before this period, that is 1st 7 2018, everything was a pre-acquisition period. So for these 3 months that we have received the dividend, we were not the owner of the investment, and therefore we will again bifurcate the pre-acquisition and the post-acquisition dividend, because the financial year would start from 1st April 2018 and we are receiving the dividend for whole year. So here also, pre-acquisition period will be 3 months, that is from 1st April 2018 to 1st July 2018. And here, post-acquisition period will be the next 9 months. So dividend will be apportioned equally, like in that proportion only. 12,000 divided by 3 upon 12, and there 12,000 divided by 12 into 9. So we will get 3,000 and 9,000 proportionately. And now here the pre-acquisition period, the pre-acquisition dividend over here, it will reduce the cost of investment. That means it will be credited to the investment account. And here the post-acquisition dividend will be taken to the profit and loss account as income from investment, because we have the right to receive this dividend always. Okay, the post-acquisition period for which we have held the investment. So that is always treated as the income from the investment, and therefore it is taken to the profit and loss account. And before the pre-acquisition period, everything that we get will reduce the cost of investment and will be credited to the investment account, as we have seen here. Here the investment account was credited by 15,000. Okay, so that way is what we do the dividend accounting. Therefore, it was written that here, however, in certain condition, such inflows signify a recovery of cost and doesn't form part of income. So a pre-acquisition dividend is not a part of our income. The post-acquisition on the other hand is a part of our income. So guys, that's it for today. You can view our courses on www.crackgradeb.com, and these are the star performers of our academy. And thank you and happy learning.